Start the recording. All right. So some of what's going on today in the markets, I wanted to look at some of the stuff that we've closed recently, kind of give you guys a quick rundown on how some of that stuff worked out and how it looked. If Shaw is here, I wanted to also make mention of one of the first deals here, which is more along the lines of the construction and equipment style of funding. You know, last week we talked pretty much about like the business capital and how it works, and I think we talked a little bit about how business capital sometimes can kind of tie into the equipment style of funding. And we had a few of the business capital deals close out in the last week, and equipment as well. And so, Shaw, I may have you just share just some high level just information on what the type of equipment was that we're able to fund. And I'll talk a little bit about how we brought the funding together, how it worked.
No problem. So the equipment lending, you know, if it's heavy equipment, that's really easy to get done typically. Anything they kind of consider yellow iron or the things that hold up resale value is really the kind of the sweet spot for most equipment lenders, because they have to look at the situation. If they had to take the equipment back, is what kind of value would it have at the end of the day? Other things are a little harder to do. You know, soft goods are hard to get equipment, you know, done on, but you know, machinery for a factory, you know, anything that has a real tangible value to it is pretty easy to get done. This particular deal that I had brought in was for a pump company. They work a lot of municipal deals for various cities across the country and redoing some of their plumbing. This initial tranche, which is going to be more over time, I was actually speaking to the lender about this last night, and their initial request was over $1 million, but that was more a kind of a long-term goal. Initial tranche came out at $77,000. That was for two pieces of equipment. They have some other things that's coming up for another 65 here, probably in the next 30 days. Documents actually just went out yesterday for that. Getting those kind of that kind of financing is typically fairly easy, again, as long as there's some resale value to the equipment. Now, some things are not truly equipment or hard to get covered. They're more of a supply by comparison to a piece of equipment. So you have to really understand, you know, what we can and can't do. Like lighting is a good example, depending if you're talking like if it's cannabis or something else, is different. You know, like Milton can talk to you about a studio situation we have for a lighting display is a little bit different than having lights for, again, for like a grow facility. That kind of coverage is going to be quite different by comparison. Lighting for a grow facility, for example, is going to be covered around 65% on average. But other things that can get done, extraction equipment, for example, like CBD, you have other things for just normal stuff that you might have in a factory. Like I have a deal we're working on right now for a packaging device of some sort. I'm not sure exactly what it looks like, but most of our lenders can work with that pretty easily. And it doesn't matter how big it is. The bigger, the better in a lot of cases anyway. But getting it done, the terms are, you know, fairly easy to work with. The credit requirements are fairly minimal compared to other kinds of financing, which is really the key. And so when you're looking at these deals, don't forget to also have a conversation about other kinds of funding they might need. Working capital. Do you need to buy any property to put that equipment into? You know, what else does that whole equation look like for that borrower? So you really understand what they're trying to do and think about, okay, well, you need that now. What are you going to need next year, especially right now? If you're not thinking about 2021, you're really leaving money on the table and not doing a good job of helping your client. So I'll leave it at that, but hopefully you get the idea.
Shaw, what about like boats and barges and stuff? Do any of our equipment leasing companies work with that type of stuff?
Floating things are really hard to get covered. It is practically a no-go. Unfortunately, I mean, granted, if it's like a giant fishing vessel, maybe, but it's not easy. That is like typically the things that are hard to cover are guns, boats, and airplanes. For the most part, those are a no-go. Granted, there are some especially niche lenders that we really don't work with that will do that, but it is far and few between. And just because it's hard to repossess those items in case they go away on their own. Granted, a crane or a tractor or a bulldozer, no problem, but those other ones are incredibly hard to get covered. Most companies will not touch them.
Yeah, so to add on to that, it's a very interesting question that you asked there, Misty. You know, a lot of again, I used to run a private Swiss bank syndication, and we financed some really interesting. And during that time, we collateralized high-end art for folks to go buy, commercial real estate, and just all types of really, really unique things. And in that time, exactly what Shaw just said is so true. When it comes to financing, I think we did a yacht one time. We did a helicopter, a private jet, just for some of those things. But it becomes a very, very specialized, very unique type of thing. And the problem, like, I think we did a helicopter one time also for like 60,000 or something like that, just like a lien against it. But
Is it me or did Milton just freeze?
It's cold in Kansas.
Yeah, Milton froze.
Yeah, I thought it was my Wi-Fi.
Anyway, Misty, while we're waiting for Milton to unfreeze, yeah, anything that is difficult to repossess is hard to get covered. It is just one of those things that when they look at what they're going to finance, it has to be looking at, one, if things go sideways, what kind of value will be left on this item. That also would go into the wholesale value. It's not going to be what the retail value would be, the wholesale value. So that's ultimately what they're looking at. But again, a lot of the stuff, depending on what it is, we have vendors who will help even get pricing for the equipment, if nothing else. If somebody has questions on, because they're going to need invoices, they're going to need POs, something to show the lender what the value of that item is, and so they can figure out what their coverage is going to be, and so there's no real problem. So just be aware that all these borrowers, they need to have price quotes in hand to make sure that the numbers on the other end it's going to match up. So Melton's back.
Yeah, sorry about that. I got kicked off. The internet has been crazy here like a couple of days, but just to add on to what I was saying just before I left, I'm curious, Misty, are you seeing any requests for that type of financing right now?
I have one guy that's wanting to purchase a barge. It's a special type of barge for people to get up into like the canal areas where some big boats and things can't fit. And when they like need to repair and fix pilings and that kind of stuff.
Yeah.
And from what the guy was telling me, that there's not many people, here in my area that have that, and he is wanting to purchase one. He was just looking to see if he could just get like an SBA loan or some type of loan where he knew he was going to have to buy it outright. And I kind of already knew like the boat thing was a no-go, but I always figure, hey, when we're talking about new lenders or this or that, it doesn't hurt to throw it out there to see if we might find somebody that does.
Yeah, so that, again, something that falls a little bit outside of our wheelhouse, but I tell you what, I do have a couple of contacts that could probably help with that. And it would be worth sending an email off. I remember once we got a loan request to finance a Carnival cruise ship. I think it was
Nice.
sitting out in Mexico. That was an incredible deal. This was a while back, of course, but I do have a couple of old contacts I can at least reach out and let's see if we can just point them in the right direction.
Okay.
Yeah, the SBA stuff might be a good idea for the small balance stuff. Goes pretty fast, like on an express loan might work because it's going to get guaranteed by the SBA, so it might be an option. It just takes longer to get processed, as you can imagine. But I think also Milton can probably back me up on this. The longer that company's been around, more likely they're going to get coverage. If it's more of a less than 2 years in business, it's going to be really tough to get any of those kind of oddball or things that most lenders don't want to touch on that space.
Yeah, he's a newer business. He was working with another guy and they were doing some aspect of it, but then he's like, I don't know why we're not doing all of this. And so he opened up his own part of it. So it's only a few months old. So he knows that's against him also.
Yeah.
But, you know, just like, you know, him and, you know, like with me, you know, if you don't put your feelers out there, you never know.
Yeah. that's
Well,
right.
you also work on working capital. Maybe there's a way you can get them funding that way and to buy the, you know, the item, and then you can always write it off later and write off or depreciate it later. So I mean, there's different ways. That's the other advantage of doing the equipment stuff, which is the depreciation factor, the tax benefits of doing the financing. So that's if
Right.
they're kind of looking to buy it outright, they kind of lose that benefit to some degree. So that's why, you know, need to talk about both lease backs as well as, you know, the just a loan on the equipment itself.
Yeah. Well, how much is the barge itself, did you say?
I think he said it was like 125,000.
Yeah, so it's not even much. I think, Shaw, I think you're right. Even he mentioned the SBA, and that might be his smartest move, because for them it's just a business loan, right?
Right.
Yeah, they tie up the collateral and stuff like that, but they may even say, look, we can fund you like this 125 for this barge, and maybe even another 100, because they like to be around 200,000. And I see it a lot where they look at it, even though it's an oddball thing, they may like and say, we can fund the barge as well as an equipment deal for them, because they're banks, and perhaps even give them some working capital. So you never know. I think
We have an SBA lender that does the startups.
we have a number of SBA lenders, and we actually have within our network a number of banks within different states that will look at the SBA requests within their states as well. And sometimes that plays out to our advantage, because like let's say, you know, I've financed things like docking or boat slips, some of the big, I forget what they call them, the marinas, like in Florida. A lot of those deals were very successful by using like lenders that specialize in those things, like within Florida, because they were accustomed to, you know, the any type of marine equipment, so to speak.
Right.
So it could be within our network. I'm pretty sure we can at least put out some feelers and see what options we have that may be able to help him with an SBA loan, you know.
Okay.
That might be easier than him going after some type of specialized equipment. But
Well, that's what he thought too. But you know, I agree. But you know, it's like I said, if you don't ask, you don't know.
yeah, that's right. I think at a minimum, we might be able to point him in the right direction. You know, if it's something we can help him with, we will. But if not, we won't spin our wheels on it. That's for sure.
Right. All right.
The
Thank you.
other side of this too is like when you're talking about even more of the conventional style of equipment, like the pumps that we just did for Shaw's client, for example. It came in classified in the industry of construction or heavy equipment, I think is how they labeled it, but they considered it more of a construction equipment, even though I think those pumps, like they pump water. Was it that they pump water out of the ground, Shaw?
Yeah, it was all plumbing, municipal plumbing for 3 different cities.
Yeah. So it was an interesting deal for pumps, but when I happened to be talking to the lenders, they said, yeah, for us, we just consider all that stuff more like a construction type of deal. And they mentioned too, you know, whenever they do equipment, they look at running working capital alongside it, which is fairly common. A lot of the equipment deals that we've done, I've seen them offer. I'll give you a great example, like trucking and transportation right now is huge. Those deals move quickly as well. And typically when you talk about someone buying another truck, like a semi-trailer, you know, $40,000, $50,000, $60,000, they always asking, hey, would they like, you know, 50% of that also in a working capital line alongside it? Sometimes it's a little bit higher. So I've seen deals where they're buying a truck, you know, $60,000, and they're offering them another $30,000 to $45,000 in working capital alongside the equipment purchase. And they try to do that pretty standard. So when you're looking at like equipment deals, there's always the opportunity to also have a working capital line of credit or loan alongside it to give the borrower more capital and also increase the earning potentials in those deals. So, you know, when we kind of revert back and we talk about working capital and so forth, it kind of opens the door even to the equipment side and what can be done there. Another recent deal that we just got done, I think just in the last day or so, was one that Lex, you worked on for a dentistry, of all things. And again, it's a business, but they came in, they applied for working capital for the dentistry. And their situation was very, very unique. Right? It was not an easy deal. It had some complexities to it because once we got into the transaction, although they did have stable income, there were some credit issues and so forth. But at the end of the day, what we were able to do for them, we were able to put a small lien on some real estate property that they owned and still fund them out $60,000 on their dentistry for. And I don't remember, Lex, do you know if they were looking at equipment or was it just pure working capital?
It was pure working capital. They had gotten into some other type of financing where it was gouging them. So they were really trying to get out of that. And, the loans that we were able to get them actually helped them out a lot because they sent Sabina a really nice email thanking us for our ability to help them.
I'm glad you mentioned two things there. So, I don't always see a lot of these deals until they get further in, or sometimes they're at the finish line and the lender just happened to be in a conversation. They mentioned to me, like, on that deal, they initially had applied for like 100,000. They couldn't get to the 100K, but once they got into it, one of the things Alexis pointed out is that they were getting gouged by some of and it may have been MCA, the merchant cash advance style of loans. I don't know. I'm assuming that's what it was. And as you know, those things, they're high rates and they're literally pinging their accounts every day, sometimes every week, but they're not just a flat rate monthly payment. And so the lender had mentioned to me when I was talking with her on the phone, she said, hey, you know what? We looked at, their whole scenario and they don't necessarily qualify for the 100, but she said to me, there's no way we can leave them though in the entire situation where they are, right? So they took the time to figure out exactly what they need. They looked at those other debts and they made it their priority to take them out of those loans, those high interest rate, crazy loans that were actually gouging them in order to bring them back into a more peaceful type of setup within their financial structure on these types of deals. And, it was a great call because she explained to me, she said, hey, you know what, when we looked at what was going on with them, we want to get them capital. But secondary to that, we knew we could help them fix the situation that they were in. And they went the extra mile and started asking more questions. And when they were able to figure out, just kind of where their income was and where they were on credit, once they were able to figure out that they had some real estate that I believe was free and clear or clear enough for them to put just a small lien on, they were able to actually go and pay off those other debts that were the high interest debts in order to bring them back to just reasonable rates on everything. So they didn't come into just a new working capital loan. They were able to eliminate the other loans, right? And come into one situation that was actually healthier for their company, for their business. And I'm sure they sleep better at night. There's a lot of working capital companies out there that really function. They make their money on those high interest rate MCA style of loans, where they call it more so leasing capital than actually getting a loan. It's just a whole weird deal. And so we're excited about the fact that our lenders will actually talk to a client, get to understand them, look at what's really going on in the situation, and then come back to them with a whole better scenario, rather than just saying, here's another high rate, type of loan. They said, let's look at this and let's actually fix this. So that was a great deal. That was for a dentistry, which was awesome. We have also on the books right now, we're almost complete with underwriting another deal for a new pediatric clinic. This particular doctor, she's starting a new practice, and I just don't remember if she had experience or not. But she's starting a new practice, and she came in and she said, I really, my goal is to see if I can qualify for about 300,000. She had about 125, I think, in equipment, and she was saying, I needed, I'd like another 100, 150 or so in working capital. And with this particular deal, we sourced it through one of our bank relationships, and they came back. I saw just yesterday. It's been probably about a 5-day process, I'd say, so far, only because the doctor has been extremely busy. She has not had time to sit down and fill out the paperwork, and we noticed that whenever she was sending us back emails with updates, it was always like 11 o'clock at night. midnight was when she was having time just to fill out 4 pages of paperwork. It's interesting, but the way that we're structuring the financing for her medical practice, and this is through an SBA style loan. I forget the rates, but it's somewhere around maybe 4.5, 5%, something like that. It's pretty inexpensive. We were able to look at her entire budget, and we figured out that she needed the 125 for, I think it was 150. I'm sorry, for the equipment side of it. She wanted another 100 to 150 for working capital, but then she also had like another, I think it was 75,000 built into the whole equation for the TI is what we call it, or the tenant improvements. So she once she supplied the whole budget, we realized, okay, you've got more going on here than just the equipment that you need for the new practice. And what we're able to do was set up a loan to where we'll help her purchase all of the equipment. We'll actually give her, I think it's 100 to 150,000 in cash for working capital. And then what we also did is we got all of her budgets for the tenant improvements for the new practice location for all the build out. And we're actually giving her a line item that will pay for all of the build out costs. So, and I think there was even another 25,000 and two separate things for 25 as well. I can't remember what those were right offhand, but in total, we were able to get her approved for up to 400,000 for this new practice that she's starting, just by looking at what was her need, what was she asking for, and then really kind of diving into figuring out where's the new practice going, what's all entailed in getting this thing off the ground and started. And so her initial thinking was that if she could get 125,000 in the working capital, she could use that working capital to then go and pay for the tenant build out herself, and use, I think, maybe 50 of that towards some other types of equipment. Once we got into the conversation, it was like, no. You actually don't need to do it that way at all. We can line item the equipment, we can line item the working capital, we can line item the tenant improvements and still get you the full 400,000 in what you need. So sometimes it's just a matter of, getting to know the clients a little bit. We're looking at, the business capital / equipment working capital. For us, it kind of somewhat falls under the same category when we look at the term loans, installment loans, equipment, whatever it may be. Any questions or feedback on that so far? Does anyone have any borrowers right now looking at business capital? Are there any specific questions to that?
Actually, Milton will jump in there because I just got the phone with one of Esther's clients just before our call. It's for an IT company, and so they're looking for 125,000, which they can do on a personal level. I already talked to the lender about that pretty quickly, but this group makes 250,000 in recurring invoices as we speak. So we're going to look at factoring them as well, just because I think might make more sense. And that's something else you guys need to think about. If they have recurring invoices, find out what they're doing on their regularly monthly basis, especially for an established company. You might help them more than you realize, because getting just a chunk of money now doesn't mean very much. In 6 months, they're going to need more. And so you need to think longer term with these people.
Yeah, I'm going to add on to that, man. I actually love IT companies, right? In the past, what we've done with them, I'll give you a good example. That software that they sell as an IT, whether it's consulting service software, etc., a lot of times they have some type of consulting agreement where they may go into a company and be setting up some additional softwares and all that. And so they have those contracts, like you said, the 250,000 in recovering purchase orders and all of that. There are a lot of companies, especially with our lenders, that will advance them on those contracts. Even if it's like in the medical world, they hire IT companies like that will come into hospitals and will upgrade all of the firmware and software on the equipment there. And that stuff is required to meet like all types of HIPAA regulations and stuff. So what we had done in the past for some IT companies is we were able to take those contracts they have for the hospitals and actually advance them anywhere, sometimes $50,000, $60,000, $70,000. That would help them pay for the expense of doing the installation itself until they can be paid back on the invoices. So when you look at IT companies, for example, that was just a great example. They are highly fundable. Whether it's factoring, purchase order, invoice factoring, we have the ability to help them get capital through a number of different means. And that goes for a number of different industries. We're looking right now at a electrician out of Florida that his monthly revenues prior to COVID were just right around 600,000. I may have mentioned this before. And he came to us saying, hey, I just need to see if you guys can help me get 150, 200,000 in some type of advance on capital and build my way to ultimately 600,000 was where he wanted to go. He still had the business coming in and the invoices out there, but because COVID kind of threw him for a loop, he was like, we had to cut a lot and we reduced a lot. So we just need some of the capital to kind of tie up some things and just kind of balance ourselves out. So you think about the IT, you think about plumbing, plumbers, electricians, a lot of those folks, contractors even, builders, all of those types of service industries, we have the means to help them get working capital, even installment term loans very, very quickly because it's simply based on their revenues or their contracts. If they have purchase orders stacking up out there, we can get them some type of capital against those purchase orders or invoices that they have. So we actually love those types of businesses. I once helped a gentleman with a carpet company, believe it or not. This was a few years back on a, I think it was a purchase, I can't remember his purchase order or factoring, but the deal was this. He was out doing in carpet installations for the Marriott hotels. But what happened was the Marriott had ordered something like the equivalent of $90,000 worth of installations, and he did not have enough cash to go buy all of the carpet he needed to make his install dates. I remember him especially for some reason, he had some craziness going on, but he had like a 411 credit score, and the credit score didn't matter. I think if I remember correctly, we were able to get him something like $75,000 in a matter of 48 hours to help him go and get it because he had the clients, he had the contracts already in place. Marriott is, when you have to grade a commercial customer on the B2B side, it doesn't get better than the Marriott. So a lot of times on purchase order and factoring, they're looking at who's paying the bill. And if that commercial customer that is paying the bill has a high rating or great credit profile, it's easy to get them the working capital that they need. So just throwing those out there as some examples. So if you guys are seeing deals like that and you have folks saying, I need working capital or hey, do you guys do invoice financing or invoice factoring? We certainly do. And those deals, again, just like the working capital, the folks that have the great credit, that need money quick, those deals move very, very quickly as well. Anything I missed there, Shaw?
No, I think again, just the borrowers need to understand that personal funding is very, very quickly. They may not want to really go down that road, but really, if they don't, they're kind of leaving money on the table. Trying to get a true business line of credit, for example, which is kind of the holy grail for most businesses, requires you to be in business for at least 2 years to even get any traction towards that end. Getting a term loan by comparison is much easier. But they really need to be open to all options and let us help them. And again, we're not saying they have to take any of it. So we just say, look, let us find out what's available to you, and you guys kick it around and decide what makes sense for your company or yourself, depending on the borrower, obviously. What is the best path forward? And really, again, you need to think about further down the line than just now. Especially if all things have changed just this year alone, and what's probably going to change next year. You need to have the conversation with the borrower about thinking beyond the right now, and also make sure that working capital is needed to understand what they're going to spend it on. If it ends up being, well, we're going to spend it on, we're going to buy this piece of equipment. Well, there's a different path to that. And because working capital is a little harder to get than getting an equipment loan by comparison. So let's split it up and tackle this from two different angles. And so just make sure you understand the request and what it's going to be used for, and again, how long it's going to last them. Again, if they ask for 50 grand now, they can be back asking for another 50 grand 6 months from now. Well, maybe there's a better way to get it done. So just make sure you really understand. And if you have questions, reach out to us. We're happy to help.
Yeah, that's absolutely right. And again, Shaw, another really good point. Part of our role too is to think about the long term. where we really add value when talking to any one of our borrowers or customers, it's all about how can I help you for the long term? How can I help you in the future and not just the right now? My biggest thing is that I want to be able to build a relationship. I want any borrower that I work with, and I see this right now. Folks that I talked to 2 months ago said, we had such a great conversation. We knew when we needed money, we would just come back to you, right? I want to get it in their head that I am that resource to the capital that they need, and I want to add value by saying, hey, look, I know you're telling me that you need 10 grand, but what are you going to do with it, right? And what are you going to need next? If we look at this from a total perspective, how can we set you up for success by looking at your total needs, thinking about where you're going and what you may need to also get there? And it happens all the time. And I think, a lot of the lenders have figured this out too. And so that's why they know when a trucking company comes in and says, I got to buy 3 more trucks to add to my fleet. They know, hey, listen, let's get the truck set up, but let's give you some extra working capital as well too. It's all about how do you add value to your borrowers when you're speaking with them and showing them that you're not just here for the right now, but you want to grow with them, you want to scale with them. The next time they need it, 20,000, 30,000, 100,000, that they're also going to pick up the phone and call you. And not only that, but who else can they refer? A lot of business that we get right now comes purely through referrals as well. Folks that we've helped do business, and then they have another business partner or another friend that says, hey, you know what, I worked with the guys at RFS, or I worked with this person. I get phone calls all the time where they're just checking up on affiliates. And they said, hey, I had a great conversation with this person. Are they really affiliated with you guys? And it's like, yep, yeah, they are. They say, hey, I've seen this person posting like all types of really interesting posts over in LinkedIn in one of the groups and channels. And they'll pick up the phone and call and say, hey, they said you guys were doing this and doing this. Is it really true? So folks are looking at the information that you guys are putting out there in the posts all day long as well. And they sometimes they call and verify because they need the money, they need the access to the capital, but they're just looking for legitimate sources. We have some even just yesterday afternoon that called and said, hey, you know what, this is kind of a large deal. Here's what we kind of heard about you guys. And we just wanted to talk to someone in the office and verify like you really do have access to this, because, they've been given the runaround by, a number of other brokers. And sometimes they just want to get someone on the phone, talk to them a little bit, but we want to build relationships. That's what it's all about. And, when we have those conversations, I always say, well, hey, who'd you talk to? Whose post did you see? And then I send them a quick message and say, hey, just got off the phone with so-and-so. Right now is the best time to call them right back. Get them right back on the phone. Said, hey, I heard you just talked to someone at the office. What can we do to help? We heard you're looking for this and this and this. It's all about building the relationships. And we're that, to me, is the number one priority when I'm listening to them. How can I help you now? But even as we're talking about it, where are you going? What is it you're going to need for the future that I can help you get funding for as well? And I think Shaw's got some of these clients now that, hey, we need working capital, but we also need equipment. Hey, by the way, can you do SBA? Oh, also, I got a partner that does, he's buying a commercial building, or he needs real estate financing, right? So it's always good to build that relationship and just share information. For me, it's never about selling. It's just about sharing information with the borrower, right? Because the reality is, if I'm just sharing, hey, here's some of the things that we offer and how we can help, and anything that I share makes a connection with them. Oh, you guys do business capital. Hey, you can also do the fix and flip, or I had an appraiser that called. One was just asking some questions yesterday, and he said, by the way, my brother-in-law owns this other commercial building. He's got some guy that's been trying to find financing. Can you help? Absolutely, we can help that borrower purchase his building, even though it's a commercial property. He was like, wow, that's great. It was an interesting conversation, because then he said, well, I'm also looking at, we've got this property down the street from your guys' office. I think it's just a home where they started to gut and rehab it, but never finished. And he says, we never finished it. So now we got to figure out, how do we sell this thing when it's halfway done? I said, don't even worry about putting it on the market. We work with a lot of real estate investors here in town. And if you need someone who can just come and buy that from you with some plan to finish the renovations. And the guy was just like, wait a minute, you have someone in your network that can help? I said, yeah, man, like, in fact, we'll fund that investor when they buy it. So, it's just about sharing information. That's it. So I honestly, the gentleman's name was Jason. We'll get a commercial building purchase out of him. I spoke to him again after that. He's sending me the address for the other property, and they may be looking at business capital as well. So you just never know. You know, it's all about building relationship and sharing some information, but seeing how can you help them down the road as well as right now. So that was a great point, Shaw.
Milton.
Yes.
Milton.
Yeah.
Hi, Jim Donald. Do we have the ability to do a portfolio loan on 9 single-family residence investment properties all as one loan?
Yeah. So what's the
Cash out?
Yeah. What's the total value?
The estimate is about 680,000, and they're wanting to get as much as they can. He suggested they wanted about 75%. I don't know if that's possible, but they owe 135,000 on 4 of the properties. 5 of the properties they have purchased within the last year and rehabbed them out of their own funds. And they're just trying to get these things refinanced to buy more properties with. But they're not, 5 of them are not seasoned a year yet.
So here's the thing, like the 5 that are not seasoned, we have what we call hard money takeout lenders that will come in and give them the cash out refis at anywhere from 70 to 80%. I never promise 80. The highest I've seen as of lately is 75. But they can do it off of 30-day title seasoning and still give them either the 5-year option, 10-year, or the 30-year notes as well. So there's definitely options for them. Now, the 680,000, if I look at 75% on the cash out, that puts us at about a total of 510,000, which works. That works with a number of our lenders that we work with. If I look at 70%, it puts us at 476,000, which is just under the $500,000 range. So what I would probably do is look at that deal a little bit closer. If I take the 680,000, and you mentioned there's 9 properties in that portfolio, right?
Right.
If I divide that by 9, I get an average value of 75,000, which is absolutely perfect. We can go down to 50,000, but if you're above 75 on the values, we can definitely help and get it done.
Okay.
So we do have resources that can help them do the cash out. Did they purchase it as a portfolio?
No, they purchased each one of these individually. Like I said, some of them, 4 of them have a loan. They're in a portfolio now of 1 loan against the 4 properties that they've held for a while. But then these 5 have all been purchased in the last year with their own cash. They rehabbed them with their own cash, and now they're wanting to add them into this group of 9 and pay off the existing loan on the other 4, get a new loan, and use it, the net cash out to buy more properties with.
Yep, we're doing those types of real estate deals all day, every day, man. We can certainly help them with that.
All right, thank you. I'll send you some information and that I have so far.
All right, we'll get them on the phone, get the information, and get the deal moving, man.
All right, thank you.
You're very welcome. All right, so before I wrap up here a little bit, I typically start the call in the CRM. I don't want to end the call without doing that on the screen share right now. Let me make sure the screen share is up. All right, let me turn that on really fast. Again, just very quickly, if you're not using the CRM, please get in there and use it. Please make sure that any of your deals that come in, when you get the CC on the submission, it goes to the account manager. It creates the contact in the CRM. We create a deal. That deal is assigned to you. And when you go into sales, click on deals, you will see a deal board pop up, and there's 2 different views. This is the column view. There's also a grid view, but I like this view much better. You can come in, you can see all of your deals sitting here. You can see the status that they're sitting in. The goal is always to get it all the way down the field, right? That's the goal. Get it from left all the way down to the right. So it move from app in. If there's need more information, if you got deals with need more info, take a look at what's needed. Get the borrower on the phone and say, here, I need this info in order to move this deal. But please remember, always log into the CRM. And as you know, when you get into those deals, you can always click into the deal itself. You can look at the activity, what has happened what's been happening on that deal. You can see here where I added a note, logged a phone call. We're trying to get better and better about that. And the same goes for you guys. If you've got a customer, you've got a deal in here and you make a phone call, click the calls, click log call, and drop the notes in there. Select the outcome that you connected, select whoever you talk to, and just put some notes. And when you do that, you can also ping the account manager so that they know there's notes, so that if there's something they need to know about the deal, this is the place to put those notes and add them. So just want to make sure that you guys are aware of it, that you're always using the CRM for this purpose.
Milton,
Yes.
Jim Donald again. On that deal with the portfolio of the real estate, on the CRM, can I just put him in as a contact right now? He hasn't completed the application, he and his partner, but he did send me his real estate schedule that gives me all the information where I can at least upload that to you with a scenario
Yes.
for you guys to look at. And then I'm trying to get him to finish the app and send it to me. I just don't have it to submit yet.
Sure. We'll start there, and then we'll make sure we get the rest of the information. But yeah.
Okay, great. Thank you.
Real quick too, guys, just when you're doing your deals into the system, just because it's come up with a few of my own affiliates that are coming in recently, but in general, you'd be much better served to fill out the application for the client over the phone so they don't skip blanks that you needed information on. We're working on getting a new application developed for you guys to use and for the borrowers to use, but it's really, really important you go through this application with them over the phone if at all possible, just because things tend to go a lot smoother if you do. It's line by line as you can see on the screen right now, but also when you get into the deal, you have to have the contact, and then you can put multiple deals into the same, under the same contact as you go along. Like I've got one deal, I've got 5 different deals for this guy, just because we split it up. He has 3 different refis we're doing for him, other things he's trying to do. So, but the application, if you're not sure where to go, what questions to ask, just use the application, and you can guide your client over the phone, whether they're doing it or you're filling it out for them. Either way, just get on the phone so you can have that conversation and really understand what they want to do and don't miss anything in the process.
This is very good information, Mr. Shaw. I don't have the business equipment application, so I need to get that, but I do that now. If I have someone on the phone, I don't even waste time saying apply. Here's my access to apply. I do it right on the phone. Let's rock and roll. Let's get it done. Because then they're very much so engaged and they feel important. So I definitely concur with you on that. But I just need to get that equipment one because I have an appointment for Friday and I need to be ready.
I'm it up right now for you, Sabina, so you can make sure.
Yeah, again, just Sabina said there, basically, you just take the time to go through it. And on top of that, when you submit that application, it goes right into the system. And if you already have an account manager, whether it's me or someone else, we'll be able to assign it right away and get you going. We're trying to eliminate any delays on your deals getting processed as much as possible. But, if you already have a deal with or have that client in the CRM, you can just add a deal on the right side of their screen to put in other things. You don't need to do another app for that client. Obviously, you can just do it right in the CRM itself.
Yeah, that is a great point.
Awesome. Thank you. I didn't know that because I have one client that gave me 7 loans, so I thought I had to do 7 applications. Thank you, Shaw.
Anything to save you some sanity, Sabina.
I know that's right. If I can grab this really quick, I might be able to show you. Here we go.
I have a question.
Yes.
Okay, so Shaw mentioned that it's easier to do personal loans than the business line. I have a client that is pre-revenue. It's also high T, and it needs about 100,000. I'm still struggling with shedding off the other clients and the other lenders I work with and just putting all my eggs in one basket. So I'm wondering, what kind of information would I need to get a quick rate of what exactly this guy can offer, than taking him to one of the lenders I've worked with, and then they would charge him a 10 to 15% interest. I don't know if you understand my question.
Yeah. So here's the thing about it. Just on the faster side of things on the personal loan style. If we're looking just like all we would want to find out for starters is if they have an idea of what their credit score is like.
Yeah, 758, 750, something like that.
So 750 and up. We would then look at, all we would need is their date of birth, their address, some very basic information, name of the name of the business that they're starting up, and then what their current income is like, whether they're W-2 or 1099, right?
Okay.
And that the income may not even be necessary, and I'm going to tell you why. I think it is Moira who has a client right now who just on the soft pull with no social security number, his trade line history looked good and his score looked good. And so they came back and said, look, we can get him, 45, I think it was 45 to 60,000. If he has no income, we'll get him that money. If he has income, we'll get him 150,000 plus, right?
Okay.
Now, those types of personal loans are built on the good credit and having some credit trade line history is what those are built upon, right? So, and from there, then do they have some current income that they can use to qualify just for the purpose of qualifying to get the money? Now, when you mentioned, the 15%, what we're seeing right now is that's kind of like an industry standard right now. On those types of personal loans on the working capital, they charge them a 50% finder's fee or success fee for placing the funds, is how it works. If they are having some trouble accepting that, like it's something where we can talk with our lenders and see if they can bring the fee down maybe a couple, 2 to 3 points, because it's not the interest rate that they pay on the money. It's just the fee to place the loan, right? So if we actually place 100,000, the lenders will charge them 15% to place that and fund the 100,000, and then they charge a $15,000 success fee for placing that money. From that 15,000, they will pay us 7,000 of that per se, for example, and then that's what we pay out in the Now, again, it's been interesting because over the last week I've seen some people that are just like, some of the lenders are saying we don't even negotiate on the 15%. If they don't want it, we're just not going to do the deal, which is interesting. And then we have some others that say, hey, you know what? You let us know. If it really is a challenge for the borrower, let's see what we can figure out to bring that fee down and still help them close the deal because they'll still get the money. Once they qualify, it's just a matter of what's it going to take to get the deal closed and funded.
Okay, makes sense.
One last note on that. Sorry.
Sure. Would this kind of loan be, what would be the likely interest rates outside the closing fee?
If you're talking about for your IT deal we were on the phone with earlier.
No, not that, another one.
The other one. Yeah, the other one. Interest rates on term loans tend to be anywhere from 6 to 15%, but again, 6% is for your top end borrower. Don't be offering saying you're going to get 6% when they're nowhere near that. Most borrowers, as Milton can tell you and all the other account managers on the call can tell you, they're nowhere near a top level score borrower. 750 seems to be the top end for most people. 680 to 750 is kind of that sweet spot, more or less. But rate wise, it's probably more accurate to say 10 to 15. If it's equipment, by the way, it will be higher in most cases. It will be 10 to 20, somewhere in that range is not out of the question. And some borrowers are okay with that. We had a borrower recently, as long as you can get it under 20, we don't care. With just anything over 20, we can't handle it because we can't afford it. But really, the other thing I want to make a point about here, and this is also for you, Esther, but in general, it's all about opportunity cost. If they're going to complain about how much the money costs, well, they need to understand how much it costs them not to have that money. Because if they're going to not be able to do a deal, get a land client, or do a job without the money in their hand right away, it actually was more expensive for them to not have it than it is to pay a little bit more for it in the beginning.
Yeah, man, you nailed it, right? You hit the nail on the head, the opportunity cost. Especially with some of these cannabis deals, I've seen folks, they'll come, we'll get them approved and they'll say, I don't want to pay that, and then they'll go shop and you'll see them 2 months later come back around. Well, listen, had you signed on the dotted line, took the money and invested it in your business would have been growing and scaling for the past 2 months, and you would have never looked back in taking those funds, right? And sometimes folks just, they miss the opportunity because they think about, you know, the fees or the rates, well, we're not charging anything excessive or anything outside of what the market is charging right now, right? But the opportunity to take the money now, invest it in your business, scale it, and start growing and keep moving with momentum is far more valuable than trying to get 2 points cheaper. It really is. It's just, you know, it's much smarter to take the money and move forward. All right.
Good enough.
Well, I think it's been a great call, a lot of great questions. Definitely appreciate all the feedback, Jim, Sabina, Esther, Shaw, everyone, Misty, Mora. Appreciate you guys taking the time to do the call. Love the questions. I see you're on today, Keela. Thanks for joining. We had a little talk the other day about, you know, helping you get started and where to really laser focus at first. So hopefully the call helps. We're going to add it into the platform today so that you can go back and actually watch it anytime you need to. Thanks again, everyone, for taking the time to be on the call today.